Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Thursday. These are the stories that set your agenda.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out.
The Nvidia CEO telling Bloomberg that business is better than ever as the world's most valuable company surprises with a bullish revenue forecast that beat expectations. We will bring you more from our exclusive interview. Tech stocks rally, pushing shares in Asia higher for the first time in 5 days. Wall Street also set to open in the green after a week of turbulence. Plus, hopes fade for a Fed rate cut as the October jobs report is scrapped, leaving policymakers without a key data point ahead of next month's meeting. So, the CEO of Nvidia coming through, of course, that company with a beat in the quarter and a beat on the forecast. Jen-Hsun Huang will then deflating those AI bubble fears, at least for now. You're seeing that ripple across the global equity markets. The Kospi over in Korea, a bit of a barometer when it comes to the AI trade, is soaring in the session. European futures pointing high by 0.9%. The FTSE 100 here in the UK looking to add 57 points, but the focus is really going to be on the Nasdaq 100, looking to add 451 points, popping 1.8%, set for a very strong session after some modest gains by the close yesterday on Wall Street. S&P evening is pointing high by 86 points, up 1.3%. Let's flip the board and have a look cross-asset. Yes, you did have the Fed minutes suggesting that many officials think it's appropriate to keep rates on hold, and then the news, of course, that we'll not be getting that October jobs report before the next meeting of the Federal Reserve. Traders then pairing their bets of a cut in December to below 40%. The expectation for December. 4.13 right now on the US benchmark 10-year. Traders, though, markets generally looking through the concerns around the Fed and lowering expectations of a rate cut in December to focus on the Nvidia story. Euro dollar at 115. Bitcoin getting a bit of a lift in the session after that $1 trillion wipeout for the crypto space. Currently just above 92,500, up 2.3% in the session. And oil in focus as we look at round sanctions aimed at Russia. $63 a barrel. On Brent, up 0.2%. Let's check in on Nvidia's pricing then after hours, given that the forward look now from this company is not just $500 billion of revenue in the quarters ahead, $500 billion, but more than that. And that's what executives said. They could be topping that forecast of around $500 billion in revenue in the quarters ahead. The strong demand coming through, particularly for its Blackwell chips. Nvidia then priced up 5%. That is the move after hours as investors jump back on board the AI story. Nvidia then delivering a surprisingly strong revenue forecast and pushing back on the idea that the AI industry is in a bubble, easing concerns that had spread across the tech sector. Of course, the world's most valuable company says it expects sales of about $65 billion in the January quarter. That's roughly $3 billion more than analysts predicted. CEO Jen-Hsun Huang is optimistic.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Let's bring in Bloomberg's Asia Tech reporter, Newly Purnell, for the details on this, the analysis. Newly, thank you for your time. Talk us through the numbers. What stood out to you and the team?
Yeah, Tom, some really remarkable numbers here. A few that stood out to me, $57 billion. That's what they said their sales were in the quarter. That beat estimates and up a remarkable 62% from last year. And then $65 billion is what they say they're expecting for the next quarter. You mentioned also the $500 billion number. That's a remarkable number that's been out there floating around, which Jen-Hsun Huang has suggested they could see for revenue in the coming quarters, and the CFO saying, actually, yes, it could be better than that. And then, Tom, just to remind people, why do we care about this print? Why is it important? They're seen as a bellwether for the entire AI industry, and so people have been looking at the billions of dollars that Meta and Microsoft and Alphabet and Amazon are spending to build out these AI infrastructures and what that means for Nvidia. And people thought, well, if they're going to see, if Nvidia says their sales are slowing, what does this mean for the overall industry? But demand very strong, as we hear Jen-Hsun Huang there saying as well, exclusively to us.
Yeah, indeed. And newly, the debate, of course, continues in Washington between the security hawks and those who want and determine that the US can create market share by getting exposure to China. Where does that debate stand? What are we hearing in terms of processes taking place in Washington, policies and where potential restrictions could lie?
Yeah, a great scoop out from our colleague Mackenzie Hawkins just in the recent hours about the White House advocating for fewer restrictions and for Nvidia to be able to make its services and chips available more in the mainland. Of course, Jen-Hsun Huang has said that they would love to do that. Any company would want to sell their goods and services there. But asked about it, Huang said, our forecast now for China is 0. And so you have to think that if they do eventually get access there, that's even better. Another thing I would like to point out just briefly, Tom, is that a lot of the questions surround when are companies investing in AI going to see return on their investment? And Huang was asked about that and others on the call, and he pointed to things not just like what we see, like the enhancements to search or robotics, but he talked about other elements like healthcare, coding, vibe coding. So an interesting indication there from spaces, sectors where they think they're seeing an uptake, and I'm sure investors will continue to watch because that's another big question. When is this stuff going to make a lot of money for all the hyperscalers pouring out vast sums for it?
Yeah, that remains a salient question, doesn't it? An excellent breakdown. Thank you very much. Bloomberg's Asia Tech reporter, Newly Purnell, with the details and the context around the Nvidia earnings and the implications. Now, global stocks, of course, jumping on the back of those earnings. Let's bring in Bloomberg's Valerie Teitel for the details on that. So the rally, the relief is there, it seems, a reinforcement of this AI theme after a few weeks of serious questioning.
Yeah, and let's hope, at least for those along the equity market, that this bullish momentum continues into year end. We know how we end in December is normally key for how investors reevaluate their portfolios come January of next year. So this momentum being carried into year end could be something quite pivotal for mega cap tech in the U.S. But Nasdaq futures are really liking what they're hearing from Nvidia, up 1.8% overnight. And we've essentially now are trading flat on the week when it comes to the Nasdaq. We know we have had a bumpy ride, at least in the month of November, for the wider index. We're down around now 5% from all-time highs. Doesn't sound like a disaster, Tom, but there's plenty of time to make up that gap to all-time highs between now and year end. A month and a half to go. We do have a lot more catalysts to contend with. Maybe not those so much focused on single stocks and earnings. Maybe the attention is going to go back to this resumption of U.S. data and perhaps how the Fed can handle their December meeting.
Well, I wonder if the Fed is the fly in the ointment for the markets because now traders betting, less than 40% chance that there's a December cut, and the Bureau for Labour Statistics then deciding not to put out additional details on jobs out of October. How significant is that for the Fed? What's going in terms of where do we land in terms of our view on the Fed at the next meeting?
Look, there was a substantial repricing of what the market thought the Fed was going to do in December. This is on the back of the fact that we are very unlikely to get any data clarity. And based on what Powell told us at the last meeting, no clarity means essentially they're not going to continue cutting. So traders really pared back their bets on the front end when it comes to the odds of that December cut. It was only 50% 2 days ago. It's now sank all the way down to 25%. So 1 in 4 odds that the Fed does decide to reduce rates when it comes to their December meeting. And a lot of that is now down to the fact that the BLS not only canceled the October jobs report, but moved the November non-farm payroll report to after the Fed's meeting on December 10th. And that is key. This lack of clarity essentially just puts more risk to this Fed cut in December. Now, it also means that those Fed officials who have dug in their heels recently saying that that the December cut isn't warranted are not going to have any data in order to change their mind, really. So we now see a big contentious split on the Fed board. It was echoed actually in the minutes yesterday that we got from the October meeting, where we saw a wide range of views, even to how the restrictiveness of policy is viewed among the board, among the members. There was also a big pushback even to that October cut, and many officials wanting to say even back in November that they're against a December cut as well.
OK, none of this is going to be news, or none of this is going to be received well, you would have thought, by President Trump, who has again voiced his concerns about the Fed's positioning, wanting to see lower rates. So if they don't go in December, you can imagine what President Trump's response may be. Bloomberg's Valerie Teitel, thank you very much indeed. Meanwhile, the Asian session is strong, particularly if you're looking at Korea and Japan. Let's bring in Winnie Su in Hong Kong with the gauge on the Asian markets and the lift coming through from the Nvidia earnings, the ripple across to Asia. Winnie.
Morning, Tom. It is quite a nice relief rally that we're seeing in Asia today. Specifically, you're seeing lots of greens across the board. And like you mentioned, it's that upbeat sales outlook from Nvidia, easing investors' concerns around if that AI bubble is there. Now, we're seeing Kospi, Taiwan's TAIEX index, and also Japan's Nikkei 225 all up more than 3% at one point. So it's really that technology shares rally is back on the page that we're seeing. So also another sector that we would like to highlight here is that property sector in China. If you flip the board and take a look at these stocks in China, they are also really rising here. You can see that these names, Country Garden, China Vanke, both, they're all up about 5% earlier today. And that's really coming after how we reported that the Chinese officials are now considering measures to lift the property market. Now, overall, the Chinese property market has been struggling for the past 4 years, and it's really important this time around to revive the property market so that we can revive the consumption. But for now, analysts are also saying that this is likely going to take some more time. Now we flip the board and take a look at another key region that we are watching very closely in the region, which is the Japanese market. Obviously, we are still seeing the stock market actually enjoying that push from the Nvidia results and hence in the green, but not so much of a good story when it comes to the currency and the bond market. You are seeing here the Japanese yen weakening further past that 157.5 level, and also bonds still under pressure as we await for Takaichi's stimulus package tomorrow.
Winnie Su in Hong Kong, thank you very much indeed. Yes, we shouldn't lose focus of what is happening in Japan as well. Expectations, of course, building ahead of that announcement out of Tokyo tomorrow from the new Japanese leader, of course. Let's bring you some breaking news right now in the banking space. The French lender BNP Paribas coming through with an update. This is the redhead. BNP Paribas raising its CET1 ratio target. So the capital, of course, that it's putting aside, its CET1 ratio target to 13%, 13% by 2027. It is also confirming its return on tangible equity target, ROTE, of 13% by 2028. So an update there in terms of its targets for both CET1 ratios, the cash that it puts aside, of course, and the return on tangible equity, targeting 13% by 2028. In the drug space, a redhead crossing on Novartis, seeing sales growth, and we're talking about compound annual growth rate increasing, or at least they are giving guidance. The numbers are 5 to 6% is what they are looking at. They see sales growth of 5 to 6% in terms of compound annual growth rate, that is for 2025 to 2030 period. So an update there from Novartis in terms of its sales growth projections for the 2025 to 2030 period of between 5 to 6%. Two stocks to watch for you at the open. Here's what else to think about today. 12 p.m. UK time. We're going to get another update on the health of the US consumer with Walmart earnings. We'll break those for you. And at 1:30 p.m. UK time, the September US jobs report drops after the Bureau of Labour Statistics said that the October report will not be released. So maybe some added importance, even if it is backdated. And later, Fed speakers, including Hammack, Cook, Myron and Paulson, will be speaking after those Fed minutes. what they have to say about the prospects of a December cut as traders pair their bets. Coming up, we're going to dig into the theme of inclusive growth and prosperity being discussed at the B20 summit in South Africa. The co-chair of the summit joins us next. This is Bloomberg. Welcome back. Let's get back to a check on the markets, lifted, of course, by the earnings coming through from Nvidia and the forward look in terms of demand for their AI accelerators. Jen-Hsun Huang talking about the strength of that business in the third quarter. Then the results beating in terms of revenues, up 62% year on year, coming in at $57 billion above the estimates of $55 billion. And of course, the forecasts for the next quarter, $65 billion. That's about $3 billion higher than had been predicted. So that story, Nvidia, of course, is the only story in town when it comes to these equity markets. And you can see the broad lift in Asia and on the futures picture as well, Europe and the US. Now, Bloomberg understands the US has issued, switching focus, a formal warning to South Africa against pushing for a joint statement at the end of this weekend's G20 event. This following the Trump administration's decision to boycott the conference despite the wider diplomatic standoff. The B20 Business Forum is pushing ahead on its final day. For more, we're joined by our Chief Africa correspondent, Jen-Hsun. Jen.
Yeah, Tom, thanks so much for that. I'm actually standing by with the Standard Bank chair, Nkululeko Nyembezi, which is Africa's biggest bank by assets. Also, she's the co-chair of the B20, which you were just mentioning there. Nkululeko, thank you so much for joining us. Tom was just alluding to the fact that the U.S. Officials have effectively boycotted the G20. Talk about where things stand as far as the U.S. officials for the B20.
Thank you very much, and nice to be with you. We have had complete engagement from the U.S. Team that is taking over the B20 from us. They came to our launch in February. We've had several meetings with them, Sherpa to Sherpa. There's been a great deal of interaction. Way back last year, it seems like a long time now, when we took over the baton from Brazil, the U.S. team also was in Brazil, and we all committed to continue with the Troika as we move forward. So we've been very happy with the engagement. So that is the team that's taking over. But we've also had wholesome engagement with the U.S. business community. They've been very active in all of the task forces and brought their experience and skills to bear towards the recommendations of the B20 South Africa. So overall, the engagement has been good.
Has there been a consensus about some of the recommendations amongst the business community, U.S. and the rest of the stakeholders and the team?
All of our recommendations enjoy consensus support from all of B20 task forces. They almost would not have gone forward without that, and we've been very tough on the B20 task force chairs to say we only want 3. I think we only had 1 that came in with 4 because we were wanting to have a lot more focus. So consensus became the key that would unlock getting quite that narrowly focused in this B20.
What do you see as the greatest achievement then from the private sector and the business community as you are passing over the baton, as you said?
I would say that having held the line on cooperation is a big deal. Collaboration for the business community did not stop being of absolute paramount importance. We are the ones that actually suffer with supply chains broken, etc. We have seen businesses really benefit from trade, for example. So holding the line on multilateralism actually has been an important outcome, which wasn't obvious when we took over, certainly not in February when we started. I think being able to also focus on some key global issues of particular importance and relevance for Africa has also been very important for us. So cost of capital, debt sustainability for sovereigns has also been a very key outcome, not only of B20, it's carried through to the G20 as well.
How do you see it sitting from the Standard Bank chair perspective? I mentioned the biggest bank by assets on the African continent. How does this potentially benefit you and the business that you're doing across the continent and elsewhere?
extremely important. So we are a big funder, for example, of sustainable development projects around the continent. We'd really love to see a lot more capital from these various sources to stack up quite neatly for infrastructure development. So for us, that's actually quite important. And I don't want to conflate sustainable finance with infrastructure, because infrastructure is a much bigger story. So to have the sovereign wealth funds and the pension funds and etc. and global finance actually zeroing in on what will actually make infrastructure development happen on the African continent is a key issue for Standard Bank. And so, as you say, we are the largest financial institution by assets on the African continent. So we see this from multiple country perspectives.
How do you see this then manifesting over the next year as the U.S. takes on the B20? Is there more infrastructure capital being channeled in potentially that we'll see? Climate finance, I mean, how are we going to know that this was a successful B20 and G20?
I think there's a few KPIs that we've put in place. As I said in my opening yesterday, we've actually put some very specific metrics we want to measure. So you're quite right, how much financing or capital we can crowd in from the private sector into infrastructure is a key outcome. In particular, if we can get even more scale into ring-fence finance for the project preparation phase. This is where we're failing. The drop-off from project ideation to actually feasibility is immense. If you close that gap, there's a lot more that we intend that could come through the efforts of B20 South Africa.
Well, congratulations on passing the baton to the U.S. We will continue to watch those KPIs and appreciate your time. That is Nonkululeko Nyembezi, the Standard Bank chair and also the co-chair of the B20.
Jennifer Tabasoja, thank you very much indeed. On the ground for us, of course, at the B20 summit in Johannesburg. Later in the hour, investors breathe a sigh of relief on bullish earnings from Nvidia. Do not miss our exclusive interview with the CEO, Jen-Hsun Huang. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the stories making the news this Thursday. The US Congress has passed a bill requiring the Justice Department to release all records tied to Jeffrey Epstein, including investigations and internal communications. President Trump had resisted the release, but over the weekend told Republicans to support it. He's dismissed scrutiny of his relationship with Epstein as a political distraction. The US has approved the sale of tens of thousands of advanced AI chips to the UAE and Saudi Arabia. The US Commerce Department says the deals involving the Emirati firm G42 and its Saudi rival Huang are contingent on them meeting, quote, rigorous security and reporting requirements. And shares in Google's parent company Alphabet rose the most in 2 months after a wave of glowing reviews for the newly released version of its Gemini AI model. One analyst described Gemini 3 as what GPT-5 was supposed to be. Google says its new model represents, quote, a massive jump in reasoning and coding ability. Coming up, our exclusive with Nvidia's CEO, Jen-Hsun Huang, as he dismisses AI bubble worries and tells us he wants to re-engage with China. That exclusive conversation is coming up. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The cloud lifts as Nvidia surprises with a bullish revenue forecast that beat already lofty expectations. In an exclusive interview, CEO Jen-Hsun Huang tells Bloomberg that business is better than ever. Tech stocks rally then, pushing shares in Asia higher for the first time in 5 days. Wall Street also set to open in the green after a week of turbulence. Plus, hopes fade for a Fed rate cut as the October jobs report is scrapped, leaving policymakers without a key data point ahead of next month's meeting. And the fading bets around the Fed in December are not putting too much of a barrier in the way of the rally that we're seeing in global equities. We're seeing it pronounced on the Kospi over in South Korea. The Japanese stock picture is also strong. And there's the read across then to European futures pointing higher by 0.9% after a flat session for Europe yesterday. Here in the UK, the FTSE 100 futures picture looking to add 49 points. S&P minis after some modest gains yesterday looking to add 1.2%, and a strong session for the Nasdaq 100 is being flagged by these futures, pointing to gains of more than 430 points on the beat in the quarter for Nvidia, and a stronger than expected forecast for the upcoming quarter. Let's flip the board and have a look cross-asset. Treasuries relatively stable despite that decision by the US government not to go ahead with an October jobs report, and the minutes from the Fed suggesting that there is concern amongst FOMC members about whether or not there is the case to go lower on rates. Many officials saying rates should be kept on hold. 4.14 right now on the US benchmark 10-year, euro-dollar at 1.15. Arguably the currency at the moment, though, is the yen, which is weaker in the session at 1.57. A big announcement from the new Prime Minister tomorrow. Bitcoin at 92,300, up 2% after that $1 trillion wipeout for the broader crypto space. And oil prices slightly higher, up 0.2%. So to Nvidia, the bumper revenue forecast for the current period is helping then counter concerns that a global surge in AI spending is poised to crash. CEO Jen-Hsun Huang told us that Chinese sales are not included in the outlook because of US restrictions. He spoke exclusively to Bloomberg about seeking to re-engage with China and the company's upbeat forecast.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world, but we've got a bunch of Blackwells to sell.
Jen-Hsun, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is zero. All of our forecast guidance that we showed, zero. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally.
During the call, the US Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humain and to the UAE through G42. But there are some requirements that the US has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that we'll continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Nvidia CEO Jen-Hsun Huang speaking exclusively to Bloomberg Tech anchor Ed Ludlow on the back of those earnings. Let's get more on Nvidia right now and bring in Bloomberg intelligence analyst Matt Bloxham. So very positive. I mean, the rhetoric from Jen-Hsun Huang as he tours the world is always he's always beating the drum for AI, but the numbers are matching that rhetoric.
Yeah, they are. So, $65 billion sales forecast for their Q4. That would be kind of, 66, 67% year-on-year growth. And it's about a 5% beat where the market was. So, an optimistic outlook, backed up by these huge investments that the hyperscalers are making into AI technology.
What does this do to the whole debate around the AI bubble? To what extent has Jen-Hsun Huang managed, effectively or not, to deflate those concerns?
Yeah, I think he's certainly kind of added some additional ammunition to the bull side of the argument, if you like, but it's still a pendulum that's swinging around quite a bit. And I think certainly in the near term, certainly Nvidia's business is going to continue to benefit. He talked about $600 billion of anticipated capital investment next year by the biggest hyperscalers, and that's essentially where the bulk of their revenue is coming from. I think that if there is a tipping point, it comes maybe sometime next year, probably in the second half, where more enterprises are judging more critically what the return on investment for their AI spending is and whether to kind of really double down or to kind of pause, because it's expensive to kind of shift to AI-based technology, and so businesses need to see either better sales on the back of it, or better productivity, or just straight cost cutting. And I think a lot of enterprises are still kind of in the evaluation stage of that process. In the meantime, the hyperscalers are investing in anticipation that is going to be a positive answer to that, so they're kind of building capacity in anticipation of that. And if they don't start to see benefits in their numbers, investors are going to start to say to them, why are you still spending $600 billion as a group? You need to kind of scale this in. So next year, I think, is a kind of critical year for the industry as a whole.
Okay, second half of 2026 is going to be a key test of the whole ROI question for these hyperscalers, and then, of course, the read across to Nvidia. Matt, thank you very much indeed. Matt Bloxham from Bloomberg Intelligence Analyst, looking, of course, at the tech space, and today with a lens on Nvidia. Let's get more analysis on the Nvidia story in the broader tech space and bring in Maria Veitmane, heads of equity research at State Street Global Markets. Maria, good morning. I have to give you credit because for the last 2 years, is it longer than that? You've been banging the drum for being exposed to tech and specifically US tech, and clearly that call has paid off, and that's been reinforced with the numbers from Nvidia.
Yeah, thank you very much. I mean, we do like tech. We liked it for a very long time. I think probably longer than last 2 years. But I mean, the idea for us was that extremely strong earnings that come from the sector, earnings visibility, earnings stability, margins, and that's exactly what Nvidia confirmed for us yesterday. So margins are amazingly strong. I mean, how many companies can produce gross margins of 73, 74%? And how many companies can generate so much free cash flow? How many companies have visibility of those enormous earnings a couple years out? I mean, that's a great story. That's what we like about tech.
Do you agree with Matt Bloxham from Bloomberg Intelligence that the second half of next year is going to be a key test of that return on investment question, that is maybe when investors start to really pressure the hyperscalers around the spend if they're not able to monetize at pace?
Yeah, I mean, definitely monetization is like important point for kind of customers. I mean, we heard that from quite a few earnings reports from kind of hyperscalers themselves when they reported when companies are able to monetize. I mean, the profits are taken a lot more constructive, more positive. We've seen kind of how market took Meta results when earnings are strong, but there are question marks how you make money. So those questions are absolutely important. But again, I keep going back to my point on Nvidia is that we know that demand for Nvidia chips is stronger than supply for like next couple of years. That's what Jen-Hsun Huang told us. So we know that story is there. We know they pre-sold their compute. So for the large cap tech companies, we know they like visibility of earnings. So that's a great positive.
Maria, what do you say to investors who sweat when they look at the valuations of these companies? Nvidia itself trading on 40 times forward earnings. I mean, you look at Palantir, and that's plus 200%. How do you address that question?
I mean, it's a perennial question. And I mean, what we know is that value stocks have underperformed for the last 20 years. So it's not just Nvidia, it's not just Palantir. I think it's kind of the more endemic question. And I think now it's fashionable to talk about K-shaped economy, but that has been true for a while, is that there is a group of companies in global stocks that are extremely profitable, and it's a very, very small group of companies. And everything else is really struggling to maintain profitability and grow and give visibility, especially as economy we have lots of question marks about kind of economic growth now. So what investors are doing is that there is lots of money coming into market. They have big allocations of money coming into equities. Where are they putting it? They're putting it into better companies and more profitable, and that's driving this valuation gap. So valuation, being able to identify something cheap has not helped investors for a long time.
Yeah, I mentioned Palantir. I said 200%. It's more than 200 times, I should say, in terms of forward earnings, the valuation for Palantir. Maria, when it comes to what for you would be the trigger or the catalyst to rotate out of tech?
Yeah, and I think that question I get asked repeatedly for the last, 3, 4, 5 years. I think for us, it's broadening of earnings. So if we find earnings that grow sustainably, strongly, persistently, visibly, with high margins somewhere else, we'll immediately go and buy there. Because, it's no question tech is expensive. And, we can add that tech is very crowded, of course. So you want to go somewhere else. You just need to find that other place. And right now, for the last few years, it was very difficult. I mentioned value. So you find cheap stocks, and they continue to underperform. So you need to find place and other than tech that have strong earnings growth. And again, sometimes, right now it looks like we have fewer and fewer opportunities with that. So it's still kind of tech becomes this kind of very concentrated story.
Well, if the Fed does not cut in December, does that suggest that broadening out and that breadth remains on hold?
First of all, we're probably more in the camp that Fed should cut. We don't see kind of inflation really accelerating. Labor market is slowing. But in general, it's really not about the specific cut in December. It's about the path and the direction of rate cycle. If they don't cut in December and then kind of push cut to early next year, that's not kind of fundamental for equity investors. We know that U.S. economy is slowing. We know it's also getting very concentrated. We know that high-income consumer is making money and able to spend. Lower income is not. We know that large corporates do a lot better than smaller ones. We know that investment is concentrated in tech sector. We know that banks lending is not great for consumer or corporate lending, and it's concentrated in private. Well, so we know this economy is concentrated. So the lower kind of part of the economy, weaker part of the economy, is getting weaker and weaker. So Fed needs to cut at some point, and that's the direction of travel, and that's what kind of equity investors thinking about. It's not whether they cut in December or in the next meeting. It's about the direction of travel, and we know direction of travel is lower rates and sustainable earnings in tech. So yes, that's what investors are buying. That's the story investors go for.
OK, a hold in December does not derail the upside for the tech story. Maria Veitmane, head of equity research at State Street Global Markets, making the case for there is no alternative but big cap tech, at least for now. Maria, thank you. Coming up, US military officials. We're going to switch focus. They're heading to Ukraine as President Trump makes another push for a peace deal. The details are next. This is Bloomberg. A US military delegation has met with Ukrainian officials as part of a fresh bid by President Trump to rejuvenate peace talks with Russia. The discussions are taking place after another US-Russian proposal modelled on the Gaza ceasefire got a tepid reception from Ukraine's supporters. Bloomberg's chief Europe correspondent Oliver Crook joins us with the details. What do we know then, Ollie, about the latest proposals?
So based on that Gaza proposal that the United States put forward that seemed to bring an end to at least the end of the war in Gaza between Hamas and Israel, that 20-point plan, we now understand there is a framework that is being presented and sort of shopped around by the Trump administration, a 28-point plan that has been sort of the architects of which are still Ambassador Steve Witkoff. Jared Kushner has also been involved in those discussions, of course, Secretary of State Marco Rubio. And on the other side of the table, on the Russian side of the table, Kirill Dmitriev, who is the head of the Sovereign Wealth Fund, who has been the sort of go-between between Russia and the United States. So we understand, initially reported by Axios, this is a proposal that has 4 broad categories: bringing peace to Ukraine, security guarantees for Ukraine, as well as security more broadly within Europe, and also the 4th part of the bucket, U.S. relations with Russia and Ukraine. Now, Tom, there is still very preliminary reporting on this. This is the early stages. We've only had this information for about 36 hours that this plan even exists. But what we understand from our own reporting, from Reuters, from the Wall Street Journal, is that within this plan, this would require the Ukrainians to give up all of the Donbass. We know this has been a very difficult conversation for the Ukrainians, even parts that Russia does not control, though it does control most of it. It would also apparently require a diminishing going forward of the Ukrainian military. It would require some promises by the Ukrainians not to try to join NATO for a number of years into the future, and also would put requirements and restrictions on the international peacekeeping force within Ukraine. This is part of the security guarantees, absolutely vital as far as the Ukrainians are concerned, in order to prevent the Russians from invading once again. What do the Russians give on the other side, according to this proposal? From what we understand, basically a promise to not further invade Ukraine and to not invade any other part of Europe. This, of course, is going to be very difficult for the Europeans and the Ukrainians to accept, in large part because the Russians had already promised to never invade Ukraine in 1994 after the Budapest Memorandum that Russia is a party to, the UK is a party to, that the United States is a party to, that guaranteed Ukrainian sovereignty in return for the Ukrainians giving up their nuclear deterrent. So as it stands from this proposal, what we understand, and we should say, Tom, a lot of caveats here, this is still early stages. This is not the final form that this will take. This seems like a very concessionary document to the Russians.
Yeah, and to your point, those Russian promises have not held up in recent history, have they? We also understand, Ollie, that the EU is looking at taking further action against Russia's so-called shadow fleet. Correct me if I'm wrong, Ollie, but I hear a lot about proposals, a lot about discussions. Where's the action from Europe on this?
I think that's the big question, Tom. And you can continue to sanction the shadow fleet. You can continue to put additional sanctions around the edges. But at the reality of at the end of the day, for the Europeans, they have really maxed out in a large extent the amount of sanction damage they can do to the Russian side of it. Where they really hold real leverage, and they have failed to come to any kind of agreement, is on these Russian assets, the 140 billion euros worth of loans that they could make to the Ukrainians to send a message to Ukraine saying, listen, you are funded for the years to come in this military operation, sending a message to the Americans saying, listen, the Europeans are willing to make these tough decisions. They're willing to prop up Ukraine. That is something that would make meaningful difference for the Ukrainians and would present leverage going into any negotiation over a 28-point plan. That is what the Europeans have failed to do repeatedly. Will they do it in December at the meeting that they have? We will have to see.
Bloomberg's chief Europe correspondent, Oliver Cook. Ollie, thank you for that important update. Now some other stories that should be top of mind. In a Bloomberg exclusive interview, Lebanon's prime minister has revealed his country is ready to engage with Israel, urging greater U.S. engagement to help move the process forward.
We are ready to go back to negotiations with
Why do you think Israel have not accepted?
I mean, really, I mean, that's a puzzle for me. I mean, they asked for negotiations. When we show readiness, they are not at the rendezvous. But that's something, I mean, I'll be bringing up with the Americans.
Lebanon's Prime Minister Nawaf Salam speaking exclusively to Bloomberg's Jemana Pescechi. Meanwhile, Bloomberg understands that a portfolio of private credit loans managed by BlackRock performed so poorly that the money manager waived some management fees, a rarity, of course, in the credit world. The asset manager funded the loans by selling bonds known as collateralized loan obligations, CLOs, which means the portfolio has to perform well enough to regularly pass a series of tests. In October, the portfolio value declined enough to breach one of those tests. There's a lot more coming up. This is Bloomberg.
Nvidia's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
Nvidia CEO Jen-Hsun Huang, of course, despite the fact that they have 0 basically in terms of sales into the Chinese market, at least for now, they came through with a beat, of course, in the most recent quarter, and the forecasts beating expectations as well. So $57 billion in revenues for Q3. Estimates had been for around $55 billion. That's growth of 62% year on year. And in the most recent quarter, expectations of $65 billion. $65 billion. That is the forecast. And if that comes through, those sales numbers would be 10 times what they were. 10 times what they were just 3 years ago. They're also forecasting, don't forget, about $500 billion in revenues over the next few quarters. So that is just a breakdown, a brief breakdown, some of the key numbers that came through from those Nvidia earnings. Let's flip the board and have a look at the total revenue story when it comes to Nvidia. I talked about that $500 billion number, almost $1 trillion. And again, the CFO suggesting they could top that number as the new chips start to come through. Those are the Rubins, which will start to come through probably towards the third quarter of 2026. This is the forecast, though, for Q4, $65 billion. And our reporting team, have broken down the numbers and suggested that, in fact, if these numbers come through as well, you'll be looking at profits, just profits from Nvidia that will top the combined sales of AMD and Intel in their totality. So that is just another superlative when it comes to the Nvidia story. The pipeline and the demand is still there. The questions are whether or not they can meet that demand, particularly when it comes to GPUs. GPUs for the cloud part of the business, Jen-Hsun Huang was saying, are sold out. To the Fed then, let's flip the board, because this came through yesterday, the decision by the BLS, the Bureau of Labor Statistics, not to publish the October jobs report because, of course, that was during the shutdown. They don't have all the data they need, and that led to a radical and pretty swift repricing around expectations for December. Radical was maybe a bit of a stretch, but certainly you saw that move lower in terms of expectations for December, now at around 35% from above 40%. It's not that long ago that it was almost 100% baked in December as a cut. That now, it seems less likely, at least in terms of the pricing, and the Fed minutes as well did nothing to reinforce the case for a December cut. That debate will, of course, continue, but the lack of clarity on that data point will be significant. Tomorrow, by the way, we're going to be speaking to the Foxconn chairman, looping back to the chip story and the tech story on Hon Hai's Tech Day. That will be significant, whether that can build on the AI momentum. And today, a conversation with Muddy Waters CEO Carson Block, 8:45 on the opening trade. That is up next. This is Bloomberg.